What happens if I give $1,000 to artificial intelligence and let it decide every single investment? No Wall Street advisors, no trading gurus, just an AI telling me where my money should go. Today, I'm putting this experiment to the test. Will I beat the market or destroy my savings? Stay until the end because the results surprised me more than I expected. Artificial intelligence is everywhere right now. ChatGPT writes essays. Midjourney creates art. DeepSeek and other AIs are predicting markets. And finance is one of the hottest areas for AI disruption. Think about it, hedge funds already spend billions on data-driven algorithms. Robo-advisors like Betterment and Wealthfront are becoming mainstream, promising to invest smarter and cheaper than human advisors. And startups are claiming their AI models can read millions of news articles, social media posts, and even earnings reports in seconds, then use that data to predict market moves. But here's the reality. Most of us don't have access to hedge fund resources. We don't have teams of quants or supercomputers. So I wanted to ask a simple question. If an everyday person like you or me just asked AI, where should I put my money right now? Can it actually make smart decisions? That's what this video is about. $1,000, 30 days, AI in charge of everything. So here's the plan. I start with exactly $1,000. I give AI one clear goal: maximize returns in 1 month. The rules are simple. I can invest in stocks, ETFs, or crypto. I can't override AI's choices, even if I disagree, and I have to stick with its plan until the end of the 30 days. Now, let's talk about the tools I used. For reasoning, I used ChatGPT, asking it to evaluate different markets and recommend investments. For technical signals, I used TradingView with its AI-powered chart analysis. For sentiment, I tested FinGPT, a financial AI trained on news, Twitter, Reddit, and reports to measure market mood. Then I gave them the same prompt. Give me the 3 best investments for the next 30 days. Be specific and explain why. The response was surprisingly consistent. Number 1, Apple stock. The reasoning? Apple was preparing AI-powered features in its ecosystem. Stable company, strong growth potential, relatively safe pick. Number 2, NVIDIA, the undisputed king of AI chips. Every major AI model, from ChatGPT to DeepSeek, depends on NVIDIA hardware. If AI is booming, NVIDIA profits. Number 3, Ethereum, a bet on blockchain adoption, decentralized finance, and the next wave of crypto innovation, higher risk, higher reward. Honestly, I expected something random or vague, but this portfolio actually made sense. Apple for safety, NVIDIA for growth, Ethereum for volatility, and possible big upside. So I followed the plan. $400 into Apple, $400 into NVIDIA, $200 into Ethereum. And then the waiting began. Week 1 was rough. Apple stayed almost flat. NVIDIA slipped about 3%, and Ethereum dropped 5%. My $1,000 was now worth only $950. At this point, I was thinking, great, I just lost money by listening to a robot. But I stuck to the rules. Week 2 changed everything. NVIDIA rebounded, jumping 6% after strong demand for its chips. Apple gained 2% thanks to positive news on product launches. And Ethereum went wild, pumping 10% in just a few days. My portfolio suddenly hit $1,040. From red to green. Not bad. Week 3 reminded me why investing is stressful. Apple slipped back down. NVIDIA dipped again after analysts warned about high valuations. And Ethereum lost half of its week 2 gains. My total dropped to $995. Basically, I was back where I started. It felt like a roller coaster. Up 1 week, down the next. Finally, week 4, NVIDIA reported earnings that blew away expectations, and the stock surged. Ethereum stabilized after weeks of volatility. Apple remained steady. By the end of the 30 days, my portfolio was worth $1,075. So yes, AI made me a profit, about 7.5% in just 1 month. For context, the S&P 500 grew only about 2% in the same period. But what does this really mean? Is AI actually better than Wall Street? Let's break it down. The strengths of AI are obvious. It processes massive amounts of information in seconds. It doesn't panic, it doesn't get greedy, and it doesn't FOMO into meme stocks. It gave me rational, well structured picks that made sense. But the weaknesses are just as important. AI doesn't predict black swan events like sudden political crises or regulatory crackdowns. It can't perfectly time the market, and it doesn't know your personal goals or risk tolerance. If Ethereum had crashed 30%, my portfolio would have taken a serious hit, and the AI wouldn't have cared. To understand this better, let's look at history. During the dot-com bubble in the late 1990s, countless investors believed technology could only go up. But when the bubble burst, many portfolios collapsed overnight. Would AI have seen it coming? Maybe, maybe not. Or take Bitcoin's crash in 2018. Thousands of retail investors lost fortunes. AI can process news and data, but it still struggles with human psychology, fear, and greed, the very things that move markets. This is why professionals say past performance doesn't guarantee future results, and AI is no exception. Still, the experiment shows one clear thing. Even with limited information and no emotions, AI managed to beat the market in my small tests. That's impressive. So what's the lesson here? Don't expect AI to make you rich overnight. Don't blindly copy its picks, but do use it as a tool. Let it analyze data for you. Let it suggest opportunities, and combine that with your own judgments, because the future of investing is not humans versus AI. It's humans using AI. This was just one experiment with $1,000. Would you let AI invest for you? Let me know in the comments. And if you enjoyed this test, make sure to hit like and subscribe, because next time I'm going to let AI build a crypto-only portfolio, and I'll give it free reign to go as risky as it wants. That's going to be insane. See you in the next one.